Today's video, we're going to be talking about CBDC. That is right, guys, the central bank digital currency. Now, working in finance, working in banking institutions, credit union institutions, this really is a game changer when it comes to the future of money. There is still a long way to go, which we're going to be covering the pros and cons of this digital currency. Now, there are a few real things that you have to understand. One is that this is technically a digital currency. It is not a cryptocurrency. And that is where I think a lot of dissemination really doesn't come, where people think cryptocurrencies are, just kind of crazy. They can go up, they can go down. We hear Bitcoin, we hear Ethereum. When you look at this is a little bit different, and that is why I wanted to cover it in this video. This is a type of digital currency is issued by central banks and tied to the country's national currency. That is right, guys. When you look at things like Ethereum, when you look at things like Bitcoin, there is technically nothing backing that, as far as I know from the research I've done, but this is actually backed by the United States government. This is backed by a country's national currency. So if the digital currency is backed by the United States dollar is backed, of course, by the government, which is going to be covering these. Now, they're most similar to stable coins. If you are familiar with cryptocurrencies, this is equivalent to kind of what a stable coin is trying to do. Cryptocurrencies that are pegged to fiat money in an attempt to maintain the same value. So one United States dollar will be one of this digital currency, really going hand in hand, making sure, again, that the value of it is there. Now, currently, there are more than 80 countries that are researching, developing some of these. Now, this is where it's going to be really crazy to think. Some are inactive, some have canceled, some have launched them. There's been a lot of different things. And now this could ultimately affect the crypto market, but you have to understand that this is not a cryptocurrency. It is a digital currency. So again, that's kind of one of the primary things. So how does it work? It is a digital representation of a country's fiat money, works in the exact same way. Many countries are working on their own and will likely have differences in how they work. Now, this is talking about the United States one. The country's central bank issues these CBDCs, which is backed by the federal government. That can be used as legal tender for transactions, paying employees, buying goods, buying services. So it is legitimate money. This may sound very familiar to what we have, but the big difference is transactions don't have to go through multiple banks. They don't have to take several days. This will happen instantaneous on one digital ledger. Now, when you think about that, guys, even let's say once upon a time when we were writing checks for everything, then we know 9/11 happened. We started going to the electronic checks. So right now, currently, if I go to Kroger on the corner and I write them a check, they run it through the cash register just as it would a debit or credit card transaction. They hand me the check back because it is processed electronically. Now, that item might take a little bit of time. There might be a timing delay before that actually hits my financial institution. With this, it will happen instantaneous, guys. It will happen the moment that you do it. Consumers would no longer need a commercial bank to use the digital currencies. For those who are unbanked, this would provide a very fast way to transfer money digitally. Now, you might be thinking that's going to be pretty interesting, because if it is happening and it doesn't have to go through multiple banks, doesn't have to take several days. Some of the concerns and kind of the red flags that I bring of this is, number one, what's going to happen to banks? What's going to happen to credit unions? I know the lending aspect, but if you do not have the deposits that are coming in, if you don't have the physical dollars coming in, or if you don't have the transactions that are going to be needed, this is really going to rock the centralized banking system of the world, with the need for so many banks and so many institutions at so many different levels. Now, there are two types of CBDC, retail and wholesale, as well as hybrids that will combine the element of both of them. Regional central banks digital currencies. Now, this is the first one we're going to cover, and this is an article over on the Monty Fool, guys. I love this website. Big shout out to them. But I really need to understand this, because we've actually talked about FedNow in meetings that I've had where I work, which again is super interesting. So retail banking digital currencies. Under this model, you'll be able to use your own CBDC wallet or an account to use for payments. This would be public digital bank options that anyone can use, especially helpful for commercials who cannot access traditional banks. Also, there is no risk of the bank failure since all of the funds are backed by the government. Now, that's pretty interesting, especially seeing SVB, Signature Bank, a bunch of other bank failures. There is no risk because it's backed by the government, which again is going to be pretty interesting. Quite a few countries have already chosen to go this route, including the Bahamas, which was the first country to launch this currency, this digital form of currency. Now, on the flip side of it, the wholesale central bank is going to be bank to bank. So this again is going to be interesting when it looks at the banking institutions. So essentially, this is going to be your Chase Bank to your Bank of America. They're going to be able to actually take the currency, swap it, or say, hey, Bank One owes Bank Two X amount of dollars because we had individuals who did transactions. We had businesses that did transactions. They can literally swap money again in the moment of just an instant. Now, it can also cross borders on payment methods. You can also have a digital ledger for the currencies, and it is also going to help prevent bank fraud. Now, this is probably one of the biggest thing, guys, is when you look at the bank fraud and also the stability of the banks, this would kind of set it at ease for both of them. Now, what are some of the big pros on this? More effective and secured payments. That is what we're looking for, guys. The ability to process transactions the moment that they occur without the lag time that we see with banks. Allow consumers to use central banks directly. Eliminate the risk of commercial banks collapsing. And that, again, is a massive, massive pro. And it is very easy to track. Now, with the pros, it sounds good, and it sounds good so far. But what are the cons? This is going to be kind of the scary part of it, kind of the different part, because some of the cons, central banks have complete control. That is right, guys. They have control in the entirety of the digital currencies that you possess, the transactions you can do. And this is where I know a lot of social media posts have really went astray and kind of got crazy with this, because essentially, let's say, for instance, you owe the government money. The government can just dip into your digital coins, boom, take the money that they request, because again, the central banks are holding, controlling, and you have the digital currency available. Number two is the less privacy for users. That is right, guys. Not only can this be kind of controlled a lot more from the banks, but they can also track it. They can literally track anything that you do with the digital currency the moment that it is done, tracking spending patterns, tracking whatever they want to use it for. You can really go off the deep end on this, on how this could be utilized. Difficult to attain widespread adoption. Similar to cryptocurrency, guys. Cryptocurrency has been out for a considerable amount of time now. And also, we are still seeing, or not seeing, an incredibly high adoption rate of cryptocurrency, mainly because it is, for me personally, the security aspect of it. If I knew 100% that all of my digital assets would be secured and they would be safe, they'd be backed by the FDIC, the NCUA, whoever it may be, which is not the case. I've actually lost a significant amount in cryptocurrency due to wallet hacks that we've seen in the past. But overall, guys, it has to be safe. And possible competition between central and commercial banks. Again, this is where I think fundamentally from a larger bank perspective, and this is where I kind of see it, and a smaller credit union perspective, I can see a lot of financial institutions disappearing with something like this, because again, there's not going to be such a big need for it. There's still going to be borrowing needs. There's still going to be things of that nature, but I can see kind of the squeeze on some of the smaller institutions, or a squeeze even on some of the regional banks that could definitely lead to some definite differences in here. Now, overall, guys, the CBDC would lead to faster transactions, cheaper transactions, more security, which benefits literally the banking institutions as well as the individuals. In countries that already have this, they get direct access to the central banking funds, which again means that the government has a lot more control of it. There's no risk in storing money with commercial banks that could collapse or fail. And since the transactions are recorded on a digital ledger, again, similar to the cryptocurrency, money is much easier to track that way, which means authorities could detect fraud, illicit activity, illegal activity, things of that nature. But again, those are the positive items. But the drawbacks on this, guys, country's central currency would have full control over the currency. The central bank could theoretically decide to put restrictions on the type of transactions that it allows, again, which is kind of scary. Central bank has data on every transaction and every user. Anytime a large organization uses too much data, there again is possibilities for privacy and issues and breaches. It's going to take some time for this to catch on. If consumers access to retail digital currency, commercial banks will lose a significant portion of the business, which would be bad for banks, also impacting the stock market because of the banking stocks that are included in there. So again, this is going to be very interesting to see exactly what happens with this and kind of where this goes. I'm going to be covering this quite a bit because, again, this impacts my professional career, what I do, and I really want to know everything about it that I can, because I know FedNow is coming. Even bank to bank, I believe, is what they're going to initiate first. So the ability for banks and credit unions to transfer these currencies instantaneous between each other, which again is going to make it a lot faster for the processing aspect. But you also have to think, guys, if you're getting, let's say, your tax returns, boom, could be done in an instant. Let's say you're getting Social Security checks, boom, could be done literally in an instant. Let's say that your employer pays you on a weekly basis, a monthly basis, even a daily basis, boom, it would be done in an instant, guys, right into this digital currency, right into your wallet with almost no fees at all to the employer, which again could be an absolute game changer. So, all right, guys, so that'll do it for today's video. Let me know in the comments what you guys think of this. It's going to be very interesting to see how this is going to come along, what's going to happen with it, what the transition, the adoption rate is going to be, and how it's going to affect the financial institutions. So again, guys, that'll do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.